Hey, it's Richard with Matthews Wealth Management. We are covering the September 2023 M2 money supply and Federal Reserve balance sheet. Again, for the month of September. Nothing really strange in this, so I'll keep it very brief. And I'm not going to say we'll see you next time, because I've watched these videos, and at the end, that makes no sense. I don't see you. Maybe you'll see me next time, whatever. So, all right, diving in. Same picture. I mean, you can see that little spike and drop or whatever. So here we are. Okay, so this is when I got all frustrated and it kept going up. Well, hey, guess what? It came back down. So that's a good thing. Here we are, $20,865,300,000,000 circulating around in our economy, right? And yeah, that's not really accurate if you factor in the value of all the goods and services. But hey, if you increase that, you can make the GDP look better. Inflation gets tough to tame because inflation is measured in the same dollars, but that's something that we'll let the experts worry about. A month ago, question mark, changed again, right? That's the thing. All this stuff gets revised. I'm almost done with the question marks because maybe just a disclaimer at the bottom of every M2 thing saying, hey, it always changes. Nothing's real. We can't measure. But if we could, this is what we see. But yeah, down 20 basis points, 19 basis points from the last month on M2 money supply. Good. Yay. Year to date, down 1.67. Not so good. Come on, we can do better than that. Can we? Because it was on a good trend, right? Before the debt ceiling was suspended, and now we did a continuing resolution, and now McCarthy's out. Hint, hint. It's October 4th today. So we'll see how all this works out. But the reason this isn't lower is not the Fed's fault. It's Congress's fault. But all in all, we're up 35% more dollars circulating. And so the definition of inflation is a measure of money, right? And so if you inflate the money supply, hence the word, then by definition in the laws of economics, prices go up. They don't inflate. And I get so sick of hearing people saying, oh, look at inflation at the grocery store. No, look at inflation at the money supply, period. That's it. But how does it affect things? It affects things when it comes all the way down, trickle down into the world of inflating prices. So we call it price inflation, but it's always driven by monetary inflation, right? And so this is the cause, and the price of milk or eggs is the effect, right? It's important to identify a cause so that you can, I don't know, do something better. But yeah, right, nobody cares. All right, so let's look at the balance sheet, right? This is the stuff that the Fed bought up because they said it's too risky for the economy. And if people really knew how much things were really worth, then they'd panic, and the market would crash, and Wall Street people wouldn't get their bonuses, and people would lose their jobs, and maybe politicians wouldn't get reelected. And there's too much at stake for all of that to happen. So instead, they just buy up a bunch of crap. And so that way we don't see any cleansing of bad assets and malinvestment in the economy like we should, because if you invest in something that's bad, you should lose money. Oh, maybe I'm mean for saying that, but that's the speculative side of it, right? We hate speculators in the market, but we don't allow people who take wrong risks to be punished because they're connected politically, I suppose. I don't know, maybe I'm wrong, just an opinion, right? So here we go. Yay, up here, and then that's BTFP, right? So we bailed out Signature Bank and Silvergate and Silicon Valley Bank, and I was reading articles that might be coming around again. We might have some more issues as rates are going up. Yields are soaring right now in the last couple of weeks, towards the end of September and then into October. Yields are through the roof. That does not bode well for banking. You remember all the bad bonds that they bought? Are they bad? Because they're government-backed, right? The government can't pay it because it can't raise taxes, they can't print enough because they can't handle inflation because they won't get reelected. Yeah, it's fun, right? All right, let's get closer. Blah, 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 blah. Cool, good, okay. That's what I want the Fed to do from last year, right? Slope should be dropping a lot better, right? Because here's the picture. This is 2008. This is COVID. This was, we tried QT, and thank goodness COVID was there. Had to do that bailout. But I mean, where do we want this to be, guys? Like, what is the purpose of a balance sheet at the Fed? why does the Fed need to hold assets? I don't know. It doesn't make sense. But if the theory is that we're going to sell all that stuff or let all that stuff mature, we got a long way to go, and this slope ain't cutting it, right? It's going to take way too long before something happens. I can't wait to come back. I like watching the old videos because it's like, yeah, that's what that was. You could tell, you could see it there. But yeah, that's history. You have to study what has happened to have an idea of what might be happening, and then you can confirm or deny in hindsight. So, yep, through there. Look at the numbers. So they sold 1.5% in a month. That's okay, right? That's good. But I mean, when they created that 91% in the span of a year, 1.5% is going to take a lot of years. Year to date, we've destroyed or sold off or allowed to mature 6% roughly of that balance sheet of that 90. It was over 100% increase, right? So these are live numbers. And I noticed a couple of these change. I didn't do the question marks, but they don't change by much. They don't change as much as the M2, and that's weird to me. I'm not exactly sure where these revisions are coming from because they're not necessarily coming from the balance sheet. That's the thing that was most frustrating when I was looking at those question marks is, well, the Fed should know what they're spending, and they kind of do, but they're still also wrong sometimes, but whatever. 1 year, 9% has matured or been sold off. Good. And, that's putting pressure on these yields in the long-term bonds. The fact that QT is happening, we're selling bonds back into the market, allegedly. Banks don't want to buy that stuff. And if they do, they're buying it at such a discount because it's already discounted mark to market, the way that they have to have their capital set up. But what does that actually do to M2? It means that M2 doesn't drop as much as this balance sheet. So the next slide that I'm going to show you is not perfectly accurate because we are not taking into account the actual price that, let's say, Barclays or JP Morgan or BlackRock pays for crappy debt that the Fed is willing to sell them. So anyway, how does this all work out? Balance sheet, they sold off 119 billion. Cool. M2 money is shrunk by as much as they round. They do a lot of rounding. They round to the nearest million. It doesn't sound like much, right? But so that's down 40, right? So what's the discrepancy here? Well, roughly 80 billion was spent by Congress in the month of September. So suspend the debt ceiling and we will make this not happen as much. I don't know. I don't know what the whole point is, but I told my wife I would do this one. So oh man, it's gonna be hard off the top of my head. If you had, what was it? The difference in a million and a billion, right? A million seconds. Oh gosh, I'm gonna get fact checked on this, and that's okay. Put it in the comments because I haven't done it today, and I don't memorize those numbers so good. A million seconds is roughly 11 months. I don't know if that's right or not. A billion seconds is 31 years. That's crazy. I think that's right. Oh my gosh, I might have to edit this because if these numbers are so terrible, I'll be too embarrassed. But okay, I had to check because it was bothering me, and it still didn't feel right. It was like not impactful enough. So, yeah, wow. The rest of that video was so good. I don't want to reshoot the whole thing. So I did the math, and a million seconds is really not, it's 11 days, not months, sorry. It's 11 days. And then a billion seconds is the 31 years. So because we don't understand what 3 more zeros means, it's the difference in 11 days or 31 years at, on a second to year scale. So, all right, back to the video. All right, so we can see that Congress is doing a terrible job with just printing more money because they need to, right? That's the gist of it, is that they don't bring enough money in to support their spending addictions. And so instead of actually telling constituents how you should balance a budget, they just create a terrible example that the rest of the culture follows, and here we are. We're all here and nobody cares. And so we'll see how it all happens. But a million seconds and a billion seconds. Go figure it out so that I don't feel so bad. But yeah, we will not see you for September's update, the October update in November, but you'll see me. Yeah, this has been a fun one. All right. Let me do a reallocation video and then pack up, and I'm out of here.